Welcome, dear traders. You are watching a recap of the American session. We are going to discuss fresh remarks of Fed policymakers, outlooks, and the labor market data. The US stock index is traded in the green zone, adding modest gains. The Dow closed the session with a 0.18% increase, while the NASDAQ rose by 0.41. The S&P 500 index climbed by 0.29%, trading at 4,140 points. All three benchmark indexes maintained bullish momentum. They were in the green zone, adding approximately 0.09 or 0.51%. The S&P index is moving today in the intraday range of 4,110 and 4,210 points. Stock traders remained cautious ahead of the Jackson Hole Symposium. However, Wall Street managed to snap its three-day losing streak. Although the recovery was quite modest, it signaled an increase in a risk appetite. Bed Bath & Beyond shares jumped by more than 30% on Wednesday, after the Wall Street Journal reported that retailer had secured new financing to boost liquidity. Optimism was also spurred by Joe Biden's decision to cancel $10,000 in student debt for those who earn less than $125,000 per year. Today, the indexes grew thanks to tech giants like Apple, Tesla, Microsoft, Amazon, and Meta. Before the opening, tech stocks rose by 0.5 and 1.9%. The biggest gainer was Tesla, as the company diverts its stock in a ratio of 3:1. Meanwhile, ExxonMobil and Chevron stocks climbed by 0.4%, each as the oil prices retained their rally amid growing concerns about supply shortages. Shares of a chip developer, Nvidia, fell by 3.3% after the company forecast a sharp drop in revenue in the current quarter on the back of a weaker gaming industry. Stock of the top banks recapped their early losses today. Let's move on the U.S. economic report. The second quarter GDP shrank by 0.6% in annual terms, versus the forecast reading of 0.9%. The economy technically entered a recession following a 1.6% decline in the first quarter. The personal consumption expenditure grew by 1.5%, which was less than the forecast figure of 1%. Private inventory investment was revised upward, although it remained in the red, mainly due to retail trade. Net trade turned positive for the first time in 2 years, as exports jumped by 17.6%, led by industrial supplies, commodities, and travel, while imports rose by 2.8%. The US dollar index retreated from 109, losing about 0.12%. At the time of preparing material for this video, it was trading at a high of 108.50. However, the US currency maintains its bullish bias. It dipped slightly ahead of the main event of the week, the Jackson Hole Symposium. And today, the US dollar index is likely to move in the price corridor of 108.20 and 109.00. As the trajectory of the index is now mixed, investors are looking forward to Jerome Powell's testimony. Fed policymakers anonymously backed new rate hikes, hinting at aggressive tightening in the near term. Federal Reserve Bank of Kansas City President Esther George has said today that it's too early to predict the magnitude of the key interest rate hike that will take place in September. The fact is that the US is only preparing its main reports on inflation and the labor market. However, Esther George preferred not to unveil her own view on the monetary policy tightening. According to the data from FedWatch, traders suppose that the regulator is more likely to raise the benchmark rate by 75 basis points than by 50 basis points. Notably, the labor market situation remains quite stable. The number of the US citizens who applied for initial claims dropped by 2,000 to 243,000 compared to 245,000 recorded during the previous week. The forecast showed a reading of 253,000. Meanwhile, a decline in the US dollar and the rise in the oil prices led to the appreciation of the Canadian dollar. However, by the moment of preparing material for this video, the pair dropped below 1.3000 to trade at 1.2950. Judging by the fundamental data, the USD CAD pair may hover within the range of 1.2920 and 1.2990. The recent report unveiled a decline in Canada's manufacturing sales. According to preliminary estimates, the indicator decreased by 0.9% after a decline of 0.8% in June. It has been falling for the third month in a row amid lower sales in the oil and coal industry, as well as in raw metallurgy. Nevertheless, the Canadian dollar has been quite stable today, mainly thanks to a weakening dollar and a 3-day increase in oil prices. Thus, Brent futures jumped by 0.39% to $101.32 per barrel, hitting a 3-week high. WTI benchmark added 0.02% to trade at $95.02. Earlier this week, Saudi Arabia announced a possible production cut by OPEC+. Meanwhile, Iran said it was studying the U.S. response to the EU's final text on reviving the 2015 nuclear deal, which could lead to a sharp increase in oil exports. Notably, Iran has already started increasing its oil output. In March 2023, oil production may grow by 6% to 4 million barrels per day, head of the national Iranian oil company said. As for the crypto market today, it has been showing mixed activity. The top assets either rise by 3% or lose 1%. The main cryptocurrency has declined by 0.35%, remaining within the sideways channel. Bitcoin is trading at $21,620, continuing to hover around $21,500. Forecasts for crypto assets are the same since tomorrow all eyes will be on the economic symposium. If a BTC jumps and consolidates above $21,500, it may climb to $21,800. According to the alternative scenario, it may slide to $20,800. Governor of the Bank of Finland, Olli Rehn, stated that the digital euro, which is being studied by the European Central Bank, might have several advantages. Thus, it's expected to simplify cross-border payments. Notably, the study of the feasibility of issuing a digital euro will be completed in October 2023. And this is how our analysts see the trading day. We wish you profitable trading. If we continue monitoring the financial market situation, stay tuned and see you next time.